And this is the one that can be changed from a sequence standpoint, is the management slide, okay? There's a couple of things that I usually, management team, but I usually like to point out, okay? Make it really tight, make it clean, okay? So if you have 3 people on the team, okay, of course names, I would use a different font to make it very visual, but one of the key things you want to explain in the management slide is, and this is where I think a lot of the entrepreneurs don't do enough analysis, think of your management team slide like a resume. Okay, so because the VCs invest into people, this is a slide that it's got to look smoking hot. And I can tell you, one of the things that I've seen as an investor is that the management team does not spend enough time making that slide really good, making it simple to understand. And so some of the things you want to, of course, if you've got 3 people on the team, okay, you want to talk about each person's background, okay? Of course, that's, you know, you want to be able to say this person came from this company or that company and all that. The other thing you want to talk about is experience, okay? And one of the things is that if you're going to talk about the previous companies you worked for, don't assume that everybody knows the companies you worked for. Of course, if I put down I worked for Ford in the manufacturing division, you're going to understand. But there's quite a few investors and angel investors in particular that may not be familiar with the category that you come from. So keep in mind and make an assumption that not everybody's going to know where you come from. If you came from, if you're one of the lead designers from Facebook or Twitter, and now you're doing your own social media thing, well, that's easy to get. But don't make assumptions. So you want to talk about the experience, and also you also want to talk about the functional expertise, okay? Because one of the things I'm going to look at as an investor is that if you have a founding team of, let's say, 3 founders, and actually when it comes to founding teams, I wrote about this in Entrepreneur Myths, the Startup Reality. One of the things I realized is that number 3 is really good when it comes to founding teams, founding members. And I think it's better because you can make decisions together quicker. When you have, I've seen this too, I funded startups that have 5 founding members, and it always became like a major headache and process in making management decisions on some key issues. So what you want to do is talk about each person, their background, their experience, who they worked for, okay? And also, like I said, functional expertise. So if you have 3 people, and one person is the technologist, another person is the sales and marketing, and the third person is more operational, then you want to quickly be able to display that to the investor. And one of the things that you also want to do, and I actually wrote a chapter on this in Entrepreneur Myths, is that you almost want to set it up in such a way where the investor can put a value to the management team. The key thing is, of course, in these type of startup situations is when you're pitching for money, at the end of the day, when the process of presentation is done, the key question that the investor is going to ask is, what do you value your company at? And so one of the things that I think has not been done enough in Silicon Valley or anywhere else is that everybody goes through the process of putting up a valuation number for a company. What I did in the book, Entrepreneur Myths, is I actually went beyond that. There's a chapter that talks about, it's actually myth number 2, that talks about valuation is based on numbers. And I go through an extensive process of giving you the valuation tools of how you should evaluate your startup and growing business. By the same token, in another chapter, I also talk about putting a valuation number to the team. So the combination of a startup idea, the concept, wherever you're at, whether you're at beta stage or prototype stage or you're out in the marketplace, is coupled with the valuation of the management team. So of course I want to see that there's somebody on the team that's experienced. It's not a complete requirement, but it would be nice to have somebody with experience. And experience could be both success and failure rates, okay? So sometimes I will tell you, there's an advantage of sometimes funding entrepreneurs that have failed before, because they learned some of the good lessons from the experience. So it's almost like they learned it either on their dime or they learned it on somebody other investor's dime. So failure is not necessarily a negative when you're looking at funding startups as an investor. So what I usually do is I have it very clean, distinct, and of course, one of the key things you want to put down in the management team is whether the person was did they lead or did they follow? Okay, and you know what? There's nothing wrong. There's nothing wrong saying I was a follower in some company doing X, Y, and Z, okay? But the same token, you still want to show that you have leadership capabilities or that you manage some project where you were actually a leader. So, don't fudge it. Tell it how it is. If you don't have enough experience, for example, from a business perspective, it doesn't matter. I mean, look at some of the high-tech entrepreneurs in Silicon Valley. I mean, Mark Zuckerberg started the whole thing out of a college dorm, and he had no problem raising the money because he gained the traction in the marketplace to do so. So from my perspective as an investor talking to you is that experience is important, but it's not the only thing. And another thing is that if you don't have experience on your team, you can always surround yourself with maybe another founder that has a lot more experience, or you can actually beef up your advisory board to show the investor that you're surrounded by a wealth of experience. And that's one of the next topics we're going to talk about. But bottom line is make sure that it's the management team slide explains who's doing what function, how it's all related, how each person deals with different functions of the business. And so all those elements, and make it easy to read. One of the things that I've seen, I can tell you, I'm begging you, please don't send me, 5 management team slides with each slide, part 1, part 2, part 3, and it's just like a huge paragraph about the person and their accomplishments. If you want to do that, keep that in the appendix for more detail. But this management team slide, I'm a big believer that if you have 3 people or 4 people, you should put it all in one slide. Okay, so, and now you could also divide it into the founding team and then also the rest of the management team. So if you have more people in your startup, then you should divide it into 2 slides. And I'm a big believer that if you have a startup, you're trying to do a $1 billion play, and you've assembled a team of, let's say, 8 people, okay? And let's say 3 of them are founders, then you should divide the slide into the founders and also into all the other people that have tremendous backgrounds from previous startups or growing companies that they've done and that they've joined your startup. So I think that's very important. But this is what you have to do. If you want to get fancy, you could put a small little picture of each person, okay, on the slide. I've never done that. I've seen some other people do it, so it really comes down to the personality of each startup. But bottom line is that's what you have to do, okay? Now, when you go from a management team, I usually, right after that, I like to talk about the advisory team, okay? And I actually talk about this as well in some of the books I've written, and I go back and forth on the advisory team. One of the things that I've seen as an investor is that people will line up like a bunch of advisors. I looked at one presentation that, I'm not kidding you, on their advisory team they had listed 30 advisors. And it's like, when you invested into as many startups as I have, it's like, come on, please, 30 advisors, when do you find the time then to run a business? I think when you're putting down the advisory team, a couple of things you want to project. The experienced investors, especially the venture capitalists and the sophisticated angels, they're going to see through that, okay? So you have to, when you choose an advisor member for your team, you have to be crystal clear what they're trying to help you with. So for instance, if you're dealing in the high-tech business, let's say on the hardware side, well, it would be nice to have somebody on your advisory team that has tremendous manufacturing experience in high-tech and actually has all the contacts and all that, if you don't have those, okay? And even if you do, it's nice to have it. So my point is that when you form an advisory team, okay, make sure that you put down the expertise, not any different than how you do it on the management team, the functions, okay? And maybe one of the additional things you want to put down from an advisory team perspective is when you list a person, maybe some of the companies that person, okay, has dealt with. Because as an investor, I'm going to find the value, because at the end of the day, if you're a startup or a growing business and you got somebody in your advisory team, you want to make sure that those people can not only give you good solid management advice, but they have a Rolodex. I'm looking personally as an investor, I want you to be surrounded with people that have huge Rolodex, or in today's modern terms, they have a huge linkages on LinkedIn, okay, to other people. So that's another thing. Do not collect names. Okay, do not collect, okay, names, because if you do, I'm going to see through it. Okay, so it's not very beneficial, because actually the more advisors you put into your list of the advisory team, in my opinion, it shows me somewhat of it that you're inefficient, because there's no way as a CEO that you can manage 20 advisors. I don't see it. So bottom line is that's the advisory team, okay? And then what I do is actually I separate another slide. If you have key strategic partners, okay, I also have a strategic partner slide, okay? And on strategic partners, okay, there's so many different ways to slice and dice this, okay? So for instance, the strategic partners that you put in here, okay, let's say you're trying to manufacture a product and you're outsourcing it, as an example. Then you want to put that manufacturing company as your strategic partner, okay? And they better be a strategic partner. It better be a case of them, if you're actually outsourcing your cool innovation to them, make sure that they are a strategic partner and you're just not a number, okay? So, because as an investor, I may want to do some due diligence. If you're coming out with an incredible product that now that you've convinced me because of your product, your market size, that it's going to sell 10 million units in the first year, then I'm going to want to make sure that your manufacturing partner is vested into it. And of course, I'm going to want to know what type of a contractual agreement you have with that particular manufacturer if you've outsourced the solution. So also, if you have like a marketing agency, okay, I'm a big believer in using internal and external marketing knowledge and power. So even though, of course, we have people, as an example, in our team internally that understand marketing really well, I still like to have marketing agencies aligned with. I still like to have an alliance with them that we would use in some particular instances. And they, of course, they're going to vary depending on what the marketing opportunity, problem, or potential solution is to something. But make sure that the agency, in my opinion, if you're choosing one, is a good one. And I can recommend some if you really need some. Just send me an email. But bottom line is that's also important. What I'm really trying to say is that your strategic partners should be the type of partners that actually complement you in something where, for instance, you may not have operational expertise, you may not have intellectual expertise. And actually, in other instances, you can look at it from both ways. You may be outsourcing something that you know really well. And so by outsourcing something that you know really well, maybe you're outsourcing it because they already have the infrastructure and the facilities to scale very quickly. So you're basically managing the outsourcing process. So in fact, I write about it in one of the articles is like, it's like outsource what you know. Okay, that's a very good opportunity for startups to reduce their cost as well as accelerate their efforts into the marketplace. So it's very important that you explain in regards to the potential of, as an example, of a manufacturing partner, or for instance, if you're doing an alliance with a marketing agency, maybe some of the other clients that they have, or some of the cool campaigns that they've done. And so, you want to have that as well. The other thing you may want to partner on is distribution partners. And I'm a big believer in this, okay? In fact, if you have a strategic partner page, I'm going to look for distribution partners, because I can tell you, after investing into more than 30 companies in various sectors, and it wasn't just one, I mean, I went across the categories, used some complexity science principles. One of the key elements that I looked for was whether the startup or growing company had some good distribution partners. Okay, and the reason is, it's really simple. If you have really good, solid distribution partners, then as you launch the product or service into the marketplace, they can help you penetrate. They can help your company and your product line penetrate into the marketplace much quicker. Also, I'm going to want to see if you do have distribution partners. Okay, I'm going to want to see what kind of an arrangement you have with them. Okay, and I'm a big believer in using distribution partners when necessary. I can tell you numerous instances in the software industry where some of the startups outsource their sales, repping and distribution process to external companies that focused only on that. And I've seen companies go from, for example, from $0 to $100 million overnight, because they used an external sales force and distribution channels to get to the retail shelf. So I'm a big believer in it, and so those are some of the components that you want to look at in terms of strategic partners. One thing I do recommend is that whatever partners you have, make sure that they're not also fulfilling the needs of your competitor. I could write a book on that part, but I won't. But I'm still a big believer that if you partner with somebody, then you got to make sure that they're not also fueling the growth of your competitor. So in summary, right now we're at the strategic partner. We're going to continue with this process and go from there. Now I'm going to get some coffee.